Edelweiss Financial stock has been in focus after the group has announced that Gallagher will be acquiring 100% stake in the Edelweiss Gallagher insurance brokers business, and Edelweiss in fact would be offloading their entire stake in this insurance broking arm, wherein Gallagher, which has a stake of already 30% in the insurance broking arm, they would be taking up the stake to 100%, and that will make Edelweiss focus on developing its life as well as the non-life insurance business. Of course, the transaction is subject to approval by IRDAI, and of course over a period of time this entire business would be rebranded to Gallagher in coming months. In fact, to speak about this transaction and also to understand the future outlook for the Edelweiss Financial, ET Now caught up with Rashesh Shah, who is the chairman of Edelweiss Group. Speaking exclusively to ET Now, Mr. Rashesh Shah stated that they would be reallocating capital from the insurance broking to the life and non-life insurance business, and I quote him, he stated that this entire transaction would provide the flexibility to reallocate capital and invest in scaling up our fast-growing life and non-life insurance business, making this a win-win for both of us. Mr. Shah stated that they want to reallocate capital to other areas of business which they believe are certainly doing fairly well. In the last two transactions, they have raised close to around 2,500 crore worth of capital, of which they would be using nearly around 1,500 crore to reduce debt on the books, and balance capital would be going into the AMC business as well as making certain tactical investments. He stated that the retail part of the business for Edelweiss Financial is doing fairly well, and they would be using nearly around 500 to 600 crore of excess capital which will be available for reallocation. They're looking at making small tactical acquisitions, especially opportunities in the fintech space is of good amount of interest. There are some good analytics firms wherein we can spend rupees 100 to 200 crore to make tactical investments, as the group wants to grow the retail credit business, AMC business, as well as the insurance business. They're also seeing some amount of tactical opportunities in the general insurance business, wherein they would be looking at acquisitions which will give them distribution or technological capabilities. And also for the retail business, which has been doing fairly well for Edelweiss now, they're stating that they have been adding close to around 1.2 to 1.5 million retail customers every year, and they believe that distribution as well as technological capabilities are fairly important. The year 2022 is going to be of good amount of importance for Edelweiss Group, and the focus would be on growth as well as capital. They do have some amount of excess capital on the books, and Mr. Shah stated that Edelweiss Wealth business, they have seen a fairly good year here, and customer assets have grown close to around 25% last year, and the PAG deal, which was a very recent deal, that has infused close to around 400 crore of capital in the Edelweiss Wealth business, and demerger of the Edelweiss Wealth business is 12 to 18 months away, and they expect Edelweiss Wealth to be listed soon, which would be good for the shareholders. He also believes that, speaking about the markets, that he has been in markets for 30 odd years, and in last 30 odd years the markets have continued to surprise, at least in the short term. But for the long term, Mr. Shah believes that India has seen corporate profit degrow from 2013 to 2020 onwards for various reasons, but now the long term trend for India corporate profit has turned, and he believes that corporate profitability will certainly show an uptick over the next 4 to 5 years. Thank you for watching.